Today I'm going to show you the exact market research process that grew one of our property clients' monthly revenue from 80,000 to 160,000 pound in less than 6 months. If you have been stuck under a million mark, this is the video that you need to watch. Do you know what mistake most business make because of which they never hit their $1 million in revenue? They guess their market and hope their guess works. But in this video, I'll show you the same research framework we use to spot the hidden demand that doubled monthly revenue of our property investment client, so you can do it too. And it's not just for the property niche. This framework has helped over 1,000 businesses across different industries hit their dream numbers. Like an artificial grass company in London grew from 6,600 pound a month to 136,000 pound a month in revenue, crossing 1.5 million in a single year. Even during COVID, when other businesses were shutting down, clients using this process achieved 20x growth. And the best part, we spent 13 years building this process and we are giving it away here for free. So far in this series, we have covered discovery, in that we talked about 3 golden W's: what, who, and why, and how you can sell the product and service at 10x the price. Plus, how to find the right audience, build trust, craft action-driven messaging, and design a site that converts and scale. If you missed the earlier parts, grab the free discovery handbook, link is in the video description, and quickly go over the points we discussed. Then we moved to the stage 2 of the DRS, where we talked about research, starting with the market research, where we map trends, demand signals, barriers, and positioning to pinpoint the real opportunities. Just like before, we have also created a free research handbook with step-by-step checklists, templates, and examples to help you put all this into action. Link is in the description. Make sure you download it and follow along. If you are new here, I am Rahul Parashar, founder of Tradofy Solutions. After leaving Accenture, one of the biggest consulting firm, and learning through plenty of early mistakes while building Tradofy, I created this 3-step DRS framework to help other businesses reach their first million and scale to multi-million faster. Now it's time for market research part 2. In part 1, using the real property investment client example, we answered key questions. What is the real objective behind market research? What's the real demand? Who else is competing and where is the space to win? How will your offer reach the consumer? And the part 2 is about giving you a deeper, more complex view of your market with the classic 5 C's and the PESTLE framework. So we'll walk you through it using the same property client example that doubled their revenue in just 6 months. So now let's begin with the first C, which is company. So before you look outward, take a hard look and honest look inward. Think about knowing exactly who you are as a business, because if you are not clear, your market never will be. And here is what to do. Ask, what is your company purpose and the guiding principles. So we did that in the very first video of this series when we uncovered the 3 golden W's. These are what, who, and why. So if you missed those, make sure you check the part first of this video, right? Or check the 3 golden W's chapter in the discovery handbook. You must define your mission, vision, and values. But why the heck is it so important to define these? Aren't these just gimmicks? Does anyone really read or care about these generic statements? Well, the answer is yes and no. Yes, if these are written by copywriter just to fill a page and aren't aligned with the founder vision. And no, if they truly reflect the founder vision and your company lives, breathe, and demonstrate these values every day, if they show up in every video, every post, and every piece of content. And that's why uncovering your why is so important. It helps you find your mission, vision, and values. So this is the soul of your business. Let's now understand this with an example of a property investment client. The mission was to simplify property investment for first-time investors through comprehensive resources that empower them with knowledge. To live and breathe with the mission, we built a comprehensive ROI calculator for them, something that didn't exist in the market then and still it doesn't. So let me take you to my laptop and show you exactly how this calculator looks like. So as you can see here, we build various calculators from wealth building to passive income and rental yield calculator. So we are into wealth builder calculator. Here, if you see how much wealth are you looking to build first? So if you are looking to build something around $1 million in 15 years, so you have to deposit something like 100K for 15 years in a location called Liverpool. And how much rental you will earn? What will be your total return on investment? What would be the property value once it completes its entire tenure of 15 years? How much ROI you will get, and what is the CAGR? So you can see how this calculator works. Calculate how much deposit that you have to pay, and considering it's 25%, so if you deposit this much amount into a property and take mortgage for the rest of the 75%, and length of ownership is 15 and the location is Liverpool and the mortgage term is 25 with the mortgage repayment plan, this is how much you are going to earn. So this gives the entire breakup, right? How much exactly you are going to get a gross rental yield, and what will be your net, and what will be your expenses. So it gives this entire calculation. You can see how much rent you are going to enjoy, right, which is 50%, and the remaining 50% will go on the expenses. And how you can see the mortgage remains stable throughout the period, whereas your rental will keep on increasing as the property prices will rise. So this helped brokers and clients who struggled with calculation were blown away by the simplicity and transparency of this tool, which perfectly reflected the client's core value, which is education first and integrity. Next is their vision. So their vision was to help over 100K investors achieve financial freedom and to provide free lifetime consultation, supported by founder's own story. And this founder's story create emotional connection. So make sure you have a founder story on your website, because as I said, and we have covered that in the previous video when we were doing content discovery as well. So this helps you build emotional connection. So once you have nailed that, what is the next important piece that you should crack in your business? Well, this is the first piece to crack if you are just starting a business, because these stories are built either through success or failures. But first, it is to identify what is your product or service and what exactly do you offer and how it makes it different. So we talked about the USP as well in the first part, and don't worry, we are going to go deeper into it when we talk about the strategy. Right, so we are going to see how you can form a USP. So in this case, the company provides property investment, buy-to-let turnkey solutions, and property management and construction service. So before we go deeper, let me show you how this looks visually. So let me again take you to my laptop and show you exactly how the company looks like and what exactly you need to put in either in your PowerPoint slide, or you can put that into your Miro. Let's go back to the company section. So we have been using this Miro in our previous videos as well to help you explain how you can do the research, and this will help you build some sort of a good growth strategy. So here is the full assessment we built with this particular client. You can see the mission is well drafted here. What exactly is their mission? What is their vision? They want to help 100K investors gain financial freedom. What are the core values? What are their product and service, right? And exactly what is their strength and what is their weakness, right? And not just that, we have to include all the brand image and the USPs. So let's go one by one, right? So this one view brings together everything and tells where the company actually stands today. And now let's go back and look at some of the strength and weakness. So ask yourself what gives you an edge and where your gaps are. So this client strength includes hosting social events, genuine client care, expertise in property investment. They offer trust and reliability. They have lots of client success stories. They have good client satisfaction percentage. They have a global reach. But their weakness is like they need to push boundaries, right? They're not conveying their value proposition on the website. They lack marketing strategies, and they have a pretty poor lead to conversion ratio, which was just 2.5%. And that is not it. What else do you think the company needs to stand out from the competition? And that comes to your brand image. So their brand image that they want to build is trustworthy, educational, client-centric, trusted advisor, and community builder. And there are a lot more that you can see and read over here. And how do customers see you now? And how do you want them to see you? After doing this, you get some sort of a clarity. How do customers see you, and how do you want to be seen? So the goal here is to be known as trustworthy, educational, and client-centric, and innovative. Yet their old site didn't fully convey that expertise, and the conversion rate confirmed it was time to refine their online presence. And here is what we mapped on the brand image. So it was trustworthy, educational, client-centric, trusted advisor, community builder, global perspective, and a lot more that you can see here. And then the USP was investment security guarantee, virtual reality property tours, environmental stability focus, lifetime property consultation, and there were a lot more that you can see, but it was one that stood out was buyback guarantee. Now you must be wondering how a broker can provide a buyback guarantee. And here is how we made it work. The guarantee was structured alongside a 3-year lock-in period, about 2 years for property development to complete, and up to 1 year for rental occupancy. And by the time the lock-in ends, most investors are already earning rental income, and only very small number ever consider asking for money back. So this single positioning shift combined with safeguard like money back guarantee and smart lock-in period transformed a crowded market into a clear defensible entry lane. So if your business is still making under $1 million in annual revenue, this is a strong chance you haven't clearly defined your USPs, which we call unique selling point or your unique value proposition. So take time to pin this down, then showcase them boldly and spread them across multiple marketing channels so every visitors immediately see why your brand is both safe and a standout choice. So by doing this first C well, you create a rock solid foundation. So we have covered this in depth in our discovery videos. Make sure you watch them all. It tells you where you stand today and what makes you valuable and what's holding you back. So every next growth move is built on clarity and not guesswork. Once you are clear on your own company, the next step is to turn outward and understand your customers. So imagine this is your target audience. So TA stands for the target audience. Here you need to go deeper than surface level stats like age or gender to see. So what actually drives them to buy your product and service, and what stops them, what all objections that they have. And we have been covering that a lot in our previous discovery video when we were talking about the content discovery and how do they decide, how do they think. So start by identifying your target audience. Ask who are they in detail, like their demographics, interests, needs, and their behavior. So we covered that in part 1 during discovery when we talked about who. It's there under 3 Golden W's chapter of free discovery handbook, and now we are taking it further. For example, the property investment client focused on professional age between 30 to 45 with steady income, and often beginners in property investing who were chasing financial freedom or passive income and long-term wealth building. Next is to trigger the emotion. So how you can exactly trigger emotion to build connection? It's by understanding exactly what your customer wants, needs, and their desires. So you need to put out message and copy that your customer reads and say, how the heck this business know me so much? And how you can do that? It's by uncovering the pain points. What problems do your product and service this really solve for them. But how do you know what are the pain of your target audience first? So by assuming or by going out and speaking to your customers. Obviously, you will go and speak to your past customers and interview them. We'll cover this out in our next part when we talk about user research. So let me again take you to my laptop and show you exactly what are the concerns that these investors had. When we interviewed over 100 plus investors, we came across many of the concerns. So let me take you to this market segmentation, and in this market segmentation, let's see the psychographics. So don't worry, we are going to walk you through the exact this market segmentation in the step 3 when we talk about the marketing strategy. But here you need to see their psychographics and concerns. And the first major concern that they had is the time management, right? So the biggest pain point was not having time for the property management, and many wanted investment to be hands off. The second was market uncertainty. So investors were hesitant because they didn't fully trust how market would move. Then comes your tax efficiency and implication. All these like mortgage uncertainty, setting up UK companies, and even the fear of fraudulent activities kept people from acting. And then comes all your investment risk. So a constant worry about losing money or getting locked into poor returns. Then there were concerns about hidden cost and past bad experience. Several mentioned frustration with unexpected expense or being burned before. So what this really shows is their hesitation wasn't just, do I have enough money? It was emotional friction, uncertainty, overwhelm, and distrust that stalled decision making. So market dynamics were tough in 2024, as we covered in our last video as well. The UK had just come out of short recession, property prices had already dropped, and inflation and mortgage rates were at all-time high. UK locals were hesitant to buy property. So what we did, how we turned this hesitation into opportunity. We have covered that in our last video. Make sure you go and check that out. Now you know the pain point, but how do you make them buy? Simply by analyzing their buying habit. But now you have a question, how do I analyze their buying habit? Look, either you ask it during the user interviews or simply record a browsing pattern using tools like Hotjar. The best would be to build an MVP, which we call a minimum viable product, and run a pilot test. And you run this pilot test with brain mapping and eye tracking to get into the brain of your customer. This little part, you need to get into it and you need to understand what exactly is going in there. So these brain mapping, eye tracking, and ERP testing are advanced user research tools that show exactly what's really happening in your customer mind. So eye tracking tells you exactly what people look and how they move across a page. ERP testing uses ECG to measure how their brain reacts to what they see, showing movements of interest or confusion. Together, these tools help you to find what exactly works versus what slows them down and what truly grabs their attention. Because attention is your new currency, and this could be anything like dollar or pound or rupees, right? So ERP works especially when combined with user interviews for context. And when we did this with investors, we found they lean on more data, calculations of how much rental income they would get in hand after cutting all mortgage and any hidden fees. To build trust, we included this profit calculator on all property pages right at the banner. This helped investor and client got 67% more conversion. And we found some investors wanted to visit the property and location before making purchase. And to resolve these issues, we added AR and VR tours online on property pages as well. And knowing all this, all is not sufficient. If you're going to run ads, you got to know how much is your customer worth, and you must calculate the CLTV, which we call as customer lifetime value. Knowing the long-term value of each customer tell you how much to invest in winning and keeping them. We found that the investor is worth £100,000 and not 5,000 or £10,000 what generally property investment company earns as commission when they sell a development to investor. How come is £100,000? So imagine if an investor stays for 10 years, either he will buy a property every after 2 years or give you at least 5 referrals in this 10-year tenure. We will see how this calculation works and how to calculate CLTV in the part 3 of the DRS process when we talked about growth strategy. In the upcoming user research video, I'll show you how an ideal persona looks and how to create one for your business, and share key insights we uncovered by doing 100 plus live interviews. So stay tuned. And once you know your customer inside out, the next move is to see who else is trying to win their attention, and this comes down to our third C, which is competitor. So imagine this devil is your competitor. So they shape both risk and opportunity. So these are the two horns of your competitor. So this is where you map the competitive landscape and find your space to stand out. And how to do it? Start by spotting your main competitor. And how do you identify your online competitor? Look, we covered that when we talked about in the discovery phase, in the SEO discovery, where we shared a quick way of identifying both paid and organic competitor online. Make sure you watch that video and download our handbook and go to the chapter SEO discovery in that. Now let me quickly tell you how to do that. You need to identify the first chain URL on Google. Forget page 2 because it's a saying in SEO word, if you want to bury a dead body, put that on page 2 of Google. But in this AI era, you cannot ignore AI mode, ChatGPT and Perplexity. This gives you a broader view of both people and platform competing for attention. So who are your direct versus indirect competitors? So what are indirect rivals? Indirect rivals are those niche or new sites that rank for your money keywords even though they don't sell what exactly you are selling, your product and service, but they still eat away your traffic. For example, in UK property investment space, direct players include like RW Invest, Track Capital, Property Investment UK and One Touch Investment. And indirect examples might include like Property Week, News Plus, Insight platform, that landlord forum or any content site which draws your potential customer via content. Once you have identified your competitor, the next question is how do you outperform them, for which you need to look where they are winning versus where they are losing or where they are weak. What are they great at? Is it pricing, customer service or content? And what do they fall short? To find out, so look at what they show and what do customer talk about them. So check their website, offers, traffic, use tools like SEMrush, Ahref and SimilarWeb. So we covered that in our previous video as well. And read their Google reviews, Trustpilot reviews to spot praise and repeated complaints. You need to follow their social media, get into their email flows. Just go and fill their contact form and subscribe to their newsletter, and you will be able to see exactly what sort of funnel that they have. So with this, you will see exactly how they are nurturing the lead, right? And even mystery shop their sales call. So once you get into their email flow, definitely they are going to call you. Just make sure you leave your real number, right? And you listen to their sales call and see how they are pitching. For example, some of our property investment clients' competitors specialize in buy to let key cities with assured net rental returns and upfront discounts. Strong selling points, but often pair this with limited personalized guidance. Now that you know where your competitors are strong and where they are weak, the next question is how are they actually attracting the customer? So this is where you look at their marketing strategies and their positioning and how they market themselves and the channel they rely on. For property client, we found that the most rival rely on SEO optimized website, content marketing and paid ads and the property investment seminars. And they are positioning themselves as leader in higher yield, low risk opportunities. Now that you know how they attract customers, ask yourself what makes their offer appealing, right? For which you need to analyze their pricing strategies. Many of our client competitors promoted opportunities starting from 65,000 to 250,000 pound, emphasizing assured rental yield and low deposit to draw first-time investors. But here is what most first-time buyers don't realize: that these assured rental schemes do not get mortgage. Brokers hike up the property prices, and that first year of guaranteed rent, it usually just paid from the investor's own upfront money. And here is what our client did: they partnered with trusted developers. Investors only had to put 20% upfront. The properties were in high demand location near universities and city centers, so they would get rented out quickly. Plus, buyers could use mortgage instead of paying everything in cash, which help boost their return on investment. This kind of clear, honest education build trust and help conversions go up. And now the question is, aside from pricing strategy, how can you outperform them in a way that's hard to copy? For which you need to spot the differentiation opportunities, where you can carve your own lane. With this property investment client, we spotted clear gaps in the market. We added truly personalized investment solution. As soon as the investor filled the book consultation form, they were presented with a handful of personalized properties to choose from and go over before the call. So this saved brokers time to present the property and the earning potential of the property, and lot of back and forth to close the deal. You can also use SEO tools like SEMrush, SimilarWeb to pull back the curtain on competitor traffic, keywords, and backlink profiles. In the previous market research video, I shared a live demo to exactly how to do competitor research on SEMrush. If you missed it, go back and watch so you can follow along step by step. We'll go deeper into competitors, but I'll show you this in Miro board we built for this particular client. So I'll walk you through how we identified their top paid and organic rivals, analyzed their strategies, and found out the key gaps and opportunities. Here's the big takeaway for now: don't just copy what competitors do well. Use their blind spot as springboard to create something only your brand can own. And once you have mapped the competition and spotted your own edge, the next smart move is to look for allies, and that takes us to the fourth C, which is collaborators. So these are the partners who can help you grow faster and add value you can't create on your own, because growth rarely happens in isolation, especially online. So here is how to approach it. First, identify your existing versus potential partners. What's already in your network and who else could fit in naturally. Think real estate agents, developers, financial institutions, technology providers, or even influencers in your space. So after doing in-depth research and mapping every partnership option, we built this visual map for our property investment client. So it showed the connection most likely to bring in more clients, raise brand awareness, and create steady referral lead. Here is what we found: sustainability and green building developers, legal and tax advisory firms, social media influencers. So next is assess the benefit of this collaboration. Ask yourself, how could these partnerships help with attracting clients or offering more complete service? Then explore the new partnership. Look beyond your current circle. For example, if you run a real estate business, you could team up with PropTech firm for virtual tours and smart data tools, global property platform to reach overseas investors, legal, tax, and educational partners for credibility and expert content, financial services such as mortgage brokers to ease funding, lifestyle services like interior design or moving support to add value. And if you're small and mid-sized business looking to grow online, here is what works best. Seek partnerships with complementary businesses or the influencers, and make sure to showcase these affiliation on your website and social channels. Those trust badges can give you conversions a real lift. The key takeaway is simple: right partnership don't just add reach, they add credibility, open new markets, and often cut your CAC, which we call customer acquisition cost. They turn isolated growth into connection growth engine. And after you have identified company, understood your customers and mapped competitors and also lined up with the collaborators, it's time to lift your eyes to wider horizon. And the final C is about understanding bigger forces. So here we are going to talk about the climate. So in climate, we are going to walk you through the PESTLE analysis like political, economical, social, technological, legal, and environmental. They can speed up or slow you down. And to do that, we use classic tool which is called PESTLE analysis. So PESTLE break those outside forces into 6 clear layers so you can see risk, opportunity long before they show up in sales number. And why the heck do you need to do all this if you are making under a million or need to hit multi-million? We'll answer all these questions in the next video, as PESTLE is detailed topic that deserves its own complete walkthrough. So that's wrap up the market research part 2 of the DRS, where we uncovered 4 C's of 5C framework: your company, your customer, your competitor, and your collaborators. And we touched a little bit of climate as well. Use this framework to make real decision where to double down, where to pivot, and how to stay ahead on your competition. So if this session helped you, give us a like, drop your thoughts in the comment, and don't forget to download the free research handbook. Link is in the description. It's packed with checklist templates so that you can put every step into action. Hit subscribe, turn on notifications so that you don't miss it. Thanks for watching, and I'll see you in the next video. Till then, enjoy life.